Hey traders, welcome to another video. We're back and we're going to be covering the AUD dollar today. If you want to learn to trade, jump underneath this video. We teach every single day live on charts. So going into this session, some really good setups. I emailed that out to everyone who follows me. I posted it around. There's a lot of people who are on our email list and in our Discord. And I send a lot of education out, like I will be for this. I like the anti-Badian setups movements. You've got Euro AUD, dollar, New Zealand dollar, pound AUD. There's various areas which I really like at the moment. This particular video, I'm going to focus on AUD dollar. Now, coming into this session is off the back of a worse outlook via China. That's what's causing the weakness here. Coupled with that is obviously dollar strength post NFP. But where you're coming now is very key as a technical level. And it's a good lesson to have as well. So we'll make this the topic of today. Not only can you see various areas of key price rejection to go off, because obviously if we want probability, as you'll know, if you've watched me for a long time, you'll know that I like to get probable entries. And I'm only going to do that where there's probability. And there's only probability where you've seen things happen before. That's what makes things probable. When something has happened before, okay, it typically will make it more likely that it's going to happen again, based, compared to it not happening whatsoever. Normally, you have to have some kind of background to get an idea of where something is going to happen, more or less. If you have a horse in a horse race and it wins, the odds drop on the next race mostly. Obviously, depending on the other horses. But generally speaking, if you get like Stradivarius, for example, a constant winner, or Red Rum, the odds will start to drop because everyone knows it's a good horse and it's more likely to win, but they only get that off the past evidence. Now, it's the same in trading mostly. And you can see where I've labeled all this key price rejection. There's more there as well. But coupled with that is the amalgamation and the bringing together of the 20, 40, 20 is at the top, you can see, your 40, and then your 100 MA. You've got your 200 MA all the way up here, but you still have these key earlier MAs coming together. The reason why that's so high is because it stretches up 100 periods, all right? 200 periods. So that's 200 candles back, okay, which is an awfully long way. It's 4 years or so. So we're talking from here all the way back up here, okay, 2020 area. So that's why that's there. But because you've had a bit of a tighter range in the last 100 periods, you can see that you're getting a very, very easy to tell mean price. The same for your 20, 40, and 100. So it's good to understand how to utilize those. You've got to get that if there is a sudden big increase in price to the left-hand side, okay, I know it falls, but if you look to the left-hand side in reverse, it's a lot higher, which brings the average up. If you've got that, you're going to get an anomaly in your higher MAs, like your 200 MA, or if you're using a 500 MA and the price had kept going all the way without this dip, again, you would see a different result. But in many cases, when you're getting this amalgamation, like I said, and this coming together of key moving averages, you're going to have some good demand or long side bias in many cases. It might take a moment for your stock oscillator to curve a bit, and I wouldn't really be shocked if this just trickles in here, because you don't really have at the moment that AUD buying power, do you? Especially with jobs and in the US, and the way China is shaping up as well as of late. A few economic woes causing those problems. But if you do stop around here, it will just continue that uptrend trajectory that you've seen as of late. You've seen continued higher highs, okay, and continued higher lows. All right. Now, if you're going to stop here, okay, you're going to have to adjust this slightly for the best fit line, okay, which typically is going to look something like that. All right. So it's a clear uptrend, in other words, is all you really need to understand. But I would say, this goes very well in line with that. And the bottom of that candle, it does just touch on here. Now, the reason why you're not pulling away that quickly, like I said, is because the sentiment is poor. But it's still a good long zone, in my opinion. I mean, if you look at the fall, or indeed the retracement off the back of, this move, you can see you're coming to your 78.6, or you're at your 70 more or less, which is still a very contentious level. So I do like this and the New Zealand dollar long, but I'm just a bit more cautious because the reaction isn't there. And like I said, it's probably because you've got no news. But, this is still an ideal price. And if you do trickle slightly lower and then come up, that's still okay. You can see now the MAs are curling over a lot better and more reasonably, and a pullback up here would be decent for most traders. But you can see it's a lot closer now because it's taking 200 periods on the hourly. If I put to the weekly, it's way further away now. And they don't sort of go in order either. Your 40 is under your 100. So you've got to understand how MAs work and how they're taking X amount of candles to form an average overall. But nonetheless, I do like this long coming into this area. I think it's very ideal. And like I said, coming together with those 3 first MAs is always a very positive sign. Now, coming under those MAs, of course, like this, would give you a target back to them, and it would still give you a very feasible long zone, in line with all these key lows you've seen, in line with probability to the left again, okay, i.e. price action areas. You can see them all around here. There's tons of them. So if you do come down there and away from those early MAs, I'll probably use those as a target for a return. Now, it does actually give you a bit of a target to the upside as well, because you may see your 200 MA just curl over. And since this is a long-term downtrend, your 200 MA becomes more relevant, okay, because it reflects that long-term downtrend. So like I said, you've got to understand the differences between moving averages and how they actually come about, based on that amount of candles. If you suddenly get a big change in data, you're going to have these drifts. But if you're reflecting on a long-term downtrend and you want to continue that with shorts, then you'd probably be more relevant looking at your 200. So I hope that helps. As always, don't forget, if you want to learn from real traders, myself and my veteran trader co-founder and all our other experienced traders, just go underneath. It's the place to be. See you soon.